$38 trillion in debt, a dying currency, and an empire that everyone says is finished. If you spend 5 minutes on the finance side of the internet, you know the story. The United States is a midlife crisis empire blowing trillions on tanks, healthcare, and overpriced cocktails. We're told the dollar is a financial grenade with the pin already pulled. But what if the real story isn't about the dollar dying? It's about what's replacing it. On the surface, the bears have a point. The U.S. national debt has exploded past $38 trillion. We are spending $1 trillion a year just to service the interest, more than we spend on national defense or veterans benefits. Meanwhile, the petrodollar system, the 50-year-old deal that forced the world to price oil in dollars, is starting to crack. Saudi Arabia is talking to China, India is buying oil in rupees, and central banks are buying gold like they're prepping for a pre-nuptial agreement because they've lost faith in the dollar. It's a beautiful, tragic narrative. It's the kind of doom-scrolling erotica that gets millions of clicks. But here's the thing. While everyone is hyper-analyzing the death of the dollar, the global financial system is quietly rewiring itself. In this video, I'm going to show you that the US isn't losing the game. It's just changing the hardware. We are moving from the petrodollar hegemony to what I call the compute hegemony. And if you don't understand the plumbing behind this shift, you're going to be blindsided by the most important economic transition since World War II. To understand the future, we have to understand the cheat code the US has used for 80 years. Economists call it exorbitant privilege. It wasn't something people voted for. It just fell into place when the US was the only major economy standing after 1945. This privilege stands on three pillars. First, intelligence. When a trade between two countries, say Brazil and China, clears through a correspondent bank in New York, it doesn't just move money, it moves data. It gives Washington a bird's eye view of global trade, who is shipping what, where, and for how much. That's pillar one, but it gets worse. Second, investment. Because the world needs dollars to buy oil, every country is forced to hold U.S. Treasury bonds as reserves. This creates a price-insensitive demand for our debt, allowing the U.S. to borrow money at significantly lower rates than anyone else. For decades, Japan was the world's ATM, fueling this system by borrowing yen at 0% to buy U.S. treasuries. And then there's the weapon. Third, jurisdiction. Because the pipes of global finance run through New York, the U.S. acts as the supreme regulator. We saw this in 2022 when the U.S. switched off Russia from the SWIFT system and froze $300 billion in assets. Now, the dollar collapse crowd argues that the unit, the BRICS blockchain currency, and mBridge, the cross-border payment platform, are going to destroy these pillars. They think that if China can trade with Saudi Arabia without touching New York, the U.S. loses its power. But they're missing the point. The U.S. isn't fighting to keep the old pipes. It's building a new set of pipes where the currency doesn't matter as much as the computational power required to run the world. For 50 years, the most important choke point on Earth was the Strait of Hormuz. 20% of the world's oil passes through that tiny strip of water. If it closes, the global economy creaks and breaks. But the old narrative that an oil shock in the Middle East destroys the U.S. economy is outdated. Why? Because the U.S. is now the largest oil producer in the world. In a modern oil crisis, the U.S. isn't the victim, it's the beneficiary. Higher prices generate revenue for U.S. energy companies while crushing competitors like China, who import 11 million barrels a day. In 2026, the real choke point isn't for oil, it's for compute. Think of it this way. Oil was the fuel for the industrial age. Compute is the fuel for the AI and algorithmic age. And just like the Strait of Hormuz, the infrastructure for compute is highly concentrated. If you control the silicon shield, the advanced chips from NVIDIA, the lithography machines from ASML, and the fabs in TSMC, you control the new global energy supply. Washington has realized that you don't need to control a country's currency if you control its ability to process data. If you can switch off a nation's access to high-end GPUs or cloud infrastructure, you've done more damage than any Swift band ever could. This is the new jurisdiction pillar. It's leverage in its purest form. This shift to compute hegemony has already rewired the stock market. We used to have a market where boring adults analyzed earnings and cash flows. That market is gone. Today, 63% of the US stock market is held by passive indexers. $13 trillion of blind money that doesn't read earnings reports. This money flows into the biggest companies by default. This is how the Magnificent Seven came to represent 36% of the S&P 500. The market has become a giant game of hot potato. It's no longer about value investing. It's about compute momentum. Companies like NVIDIA and Palantir are being valued at 50 to 400 times earnings because they aren't just companies. They are the infrastructure of the new regime. Meet Dave. He buys tech stocks because stocks only go up. In a bull market, Dave feels like a genius, the next George Soros. But Dave is just a passenger in a system run by CTAs, commodity trading advisors, and algorithms that react to trend triggers rather than reality. When the compute story is strong, these algorithms create a feedback loop that drags the whole market higher. But as we saw with the Nifty 50 bubble in 1973, when the concentration gets too high and the dominoes fall, the recovery doesn't take months, it takes years. The US isn't drowning in debt in the traditional sense. It's financing a transition to a world where its debt is backed by its monopoly on the world's most valuable resource, the power to run the algorithms that manage everything from your mortgage to global supply chains. If China cuts off US chip access tomorrow, your mortgage rate algorithm stops working. Your GPS stops updating. Your hospital's AI diagnostic goes dark in 48 hours. So, where does this leave us in 2026? We are staring at a top-heavy market pretending that valuations don't matter and whispering the four most expensive words in English. This time is different. The bull case is that the Fed will cut rates, liquidity will loosen, and the compute hegemony will drive a new golden age. The bear case is that we are in an AI bubble more overhyped than the Apple Vision Pro, and we're overdue for a reversion to the mean. But the real scenario is the uncomfortable gray area, a market where headlines flip every 2 weeks, where gold is priced for a troubling future while stocks are priced for optimistic growth. This dissonance is a signal that the future is no longer clear. Central banks are buying gold at record paces because they are preemptively positioning for a world where the old petrodollar rules don't apply anymore. They aren't waiting for the crisis. They're hedging a future they don't fully trust. The US dollar isn't going to collapse overnight. It's too deeply rooted, but its dominance is moving from blind faith to conditional trust. The monopoly is dying because for the first time in 80 years, optionality exists. But if I had to bet, I'd bet on compute because the country that controls the chips controls the century. What have we learned? That the debt crisis is real, but it's only half the story. That the broken market isn't a glitch, it's the new operating system. And that the transition from oil to compute is the secret story that traditional media won't cover because it requires more brain cells than doom scrolling allows for. The real threats aren't the loud ones. The orange man or the AI bubble. The real threats are the ones hiding in plain sight. They are the plumbing shifts, the repatriation of Japanese capital, the rise of the unit, and the weaponization of computational power. The US is surviving on debt, yes, but it's also building the only Silicon fortress that matters. In 2026, the question isn't whether you have dollars in your pocket, it's whether you have access to the compute that runs the world. If you want to stay ahead of the fine print that the mainstream media conveniently forgets to mention, hit subscribe. Because in this market, nobody knows what the hell is going on, but the people who watch the plumbing usually end up with the most duct tape to hold their future together. Leave a comment below. Do you think compute is the new oil? Or are we just watching another brilliant scam unfold in real time?